the mentor obviously have. If you guys are on the elite, right, understand you guys are just gonna have to plug into to the group sessions, right? You guys are gonna have to be willing to just, like I said, just ask questions in the chat. Because like I said, people like this is not gonna be something where people are gonna hold your hand, right? Because if someone has to hold your hand to do something, you're already like you messed up. So you're gonna be bad at whatever you do when you first begin. So it's accepting the fact that you're gonna be bad and just asking questions to learn from your mistakes because you're going to make mistakes as soon as you come in. You're not going to be perfect, right? A lot of these things might be a little bit confusing, but the goal is to make it make sense for, like I said, every single one of you guys. Um, Let me just check the chat. Okay, chat's good. So one thing I want you guys to know, okay, is that coming into the beginning of this new week, there's just going to be a lot of things that you guys should ideally just be paying attention to when it comes down to what's going to be happening, right? Because based on how last week closed, there was just a lot of liquidity that like we were really just running, right? For most of the week on virtually everything, we were kind of just going up, right? On at least everything we trade. Crypto was flying, gold was making its rounds up. Indices we had bought, right? Obviously made money off of indices. So what I want you guys to just understand is there's going to be a lot of corrections that are going to be coming in this following week. And by corrections, I just simply mean correcting the algorithm, right? Fixing just the insufficiencies and imbalances we created on the way up, because a lot of people are winning from buys on a lot of these pairs. And I just genuinely feel like to start the week, we're going to kind of run liquidity. So as of right now, kind of what is piquing my interest is gold, right? My eyes 15-minute just broke to the downside. I like how too at the beginning of the beginning of the day, we actually had a wick that just swept right above these highs. So we had liquidity right here, and we actually had that liquidity get swept. So in my eyes, right, it was a smaller time frame sweep, right? So obviously we just barely pushed above, but from the perspective that I have right here, this 1801 area was in reality playing off of this candle, this 15-minute institutional area, right? So in terms of points of interest, right, a lot of people would kind of look at these two candles and they would really look at like the top candle. This top candle is our point of interest. But the reason why, in my eyes, the top candle is not really the point of interest, is because the body is so big on obviously this up candle. But you have to understand what happened before this big up candle, and this is where some of the fundamentals that I'm gonna teach you is gonna kind of help it make sense. So right here, this wick that obviously swept down right before we impulsively pushed to the upside. This wick in here was simply news. So I can't remember what particular news it was off the top of my head. But one thing to note is okay, if there's news, right, for those of you guys that are new, right, I'm going to drop a link in the chat for you guys. And this is going to be the link to the website where you guys are going to go check to see if there's news, right? So now you're never going to know, now you're never going to miss volatility, right, in the markets. You're going to understand when the markets are, because you can see today, Sunday, there's no news. Tomorrow, Monday, right, a little bit of news, but Wednesday is really where we got FOMC, right? We have an FOMC meeting, we have core retails and sales. So I want you guys to pay attention to Forex Factory. For me, I only have, like, if you go to filters right here, this green thing, I only have the red and the orange highlighted because typically those are going to be the only news that move things. It's not to say that a yellow won't, but it's like the likelihood of a yellow really pushing it is very unlikely. Like it's just not typically something that's extremely volatile. So these red folders that we have on Wednesday. So pay attention. GBP at 2 a.m. Pay attention. There's going to be news, right? We're going to be actually trading at 2 a.m. So we could probably catch a little bit of that news. We might be able to catch a play on JUR 30. I don't personally trade GBP pairs, but JUR 30 would move based off of obviously GBP. Then we have USD retail core sales. So USD should be moving at around 8:30, and then also at 2 o'clock there's a meeting, FOMC meeting. So there might be some volatility. Sometimes, like when there's meetings, like there's not always volatility, but there is at times just extensive volatility throughout those periods. So realistically, this week right here was news, right? But the perspective, right, when we go to the hourly, that I'm really looking at is not really the hourly, but if we just go even higher, right? So the reason why this is just so important is because one, we have liquidity here. Okay, so this black line represents money, pockets of money. Why? Because there's a lot of people that were just really selling. People were selling here, people were selling in here, people were selling in here, right? So just kind of understanding that. I'll get rid of this to just make it as simplistic as possible for the time being. This right here, all we did, right, for the news was capture liquidity to the low. So basically what gold, and in simplistic terms, what gold is going to do before it really goes up and down most of the time is it's going to sweep both sides of the board. Okay. So what I mean by that is just to put into perspective, right? All of this movement right here is sideways movement. Okay. But we can see for the most part, right? If we were to go to a little bit of a higher time frame, if we go to 30-minute, for example, right, we could see where we have just relatively equal lows, right? So we have a lot of equal lows really in this area right here, right? So a lot of equal lows there, liquidity, right? Liquidity here, right? But then all of that got captured, right? So you can see we had equal lows in here and we made a push down, right? Which obviously captured all of these lows. And what we did immediately after was break structure to the upside on the 30-minute, right? So this is why even we were looking for, I think we caught buys or we might have caught short. Like we caught buys and TP at 95. Yeah, we caught buys, TP at 95, right? And then news would have ended up hitting us out, but that's why the first TP was 95, right? Because 95 was realistically liquidity. We had liquidity right here, as well as once we broke above, you would expect a retracement back down to the downside after we break structure, we make a higher high. But with this wick here with news, right? If we just punched up into here and then fell, like immediately after, like you can see we kind of pushed down a little bit, but we ended up driving back up. If we just fell right away, I wouldn't have really liked the sells. But because we did drive back up, right, and if we go to the 5-minute, right, we really kind of pay attention to this last drive up, right? So we can see there was really two buy candles, right, before we then dropped, we fell. So fundamentally, you have to understand this is where manipulation was. This is where most of the manipulation was happening. Okay. So if we really just look at this last up candle, right, it's no coincidence that when price, right, it fell a little bit, but when we push back up, we tapped the open of this buy candle, right? And it's no coincidence why we did that. The reason why we had to do that is because one, right, we have to fix insufficiencies within the market. Two, just by looking at the side of my eye, we do have an imbalance right in here. Right, so we did come in and fill more than 50% of that imbalance. But then on top of that, right, immediately after on the 5-minute, after we break back into there, right, we broke structure, right? With this down candle, and you can see we made a little bit of a drive back up into this imbalance area, but realistically, being able to scale into shorts on here would have been fairly simplistic, right? But now, when we really look at it from this perspective, we didn't actually get a 15-minute break of structure, a higher time frame break of structure, right? We didn't actually get a 15-minute break of structure until here. Okay. So realistically, once we got that break of structure in here, what would we anticipate, right? A drive back into that last institutional area, that last push up before we drove price down, right? That last push up before we then drove price down, right? Price is going to return to these areas of manipulation, right? Because we're going to have to remove or lessen the amount of orders. So if the banks, right, bought the market up here, but then they sold it down, they're going to have to buy it back up to remove some of the buy positions they have. Why? Because they're going to be in drawdown. They're going to be in a lot of drawdown. So they'll essentially buy and sell the market up and down to just remove and lessen previous areas in which they got into the market. Okay. So now that we've identified, right, this last institutional area before we broke structure, right, and we kind of look at where we came back into, it makes sense because on the smaller time frame, right, we really got that smaller time frame distribution. And we just come back in there and tap that. Yes, sir, we did. Yeah, I like shorts right now on gold. We may have missed, right? May have missed the re-entry, right? To me, this looks like it could have been it, but ideally we could see another push up. Realistically, regardless, like the stop loss even to the high, this area be like 23 pips, right? First TP in my eyes, I would want to at least see us fill here, right? Into this imbalance, this institutional area. If we push lower, I would really anticipate that we would take lows, right? I think we were going to respect structure, but I just genuinely think that we're going to take this liquidity in here. Essentially, I just think we're going to spike below, right? Obviously, below this institutional area, right? And capture that liquidity. I also have this area down here that I was looking at. I don't know if we'll kind of play it, but really just looking, taking our fibs, right? A lot of you guys be fibbing wrong too. Okay, so the way that I fib, I just fib structure. I fib structure of the range that I'm playing. So right now, if I were to just identify the range, okay, the range would be from the most relative high to the most relative low. And what I mean by that is that last significant up move before the down move, or that last significant down move before we drove price up. So if we really look at where price came into when we fib up, this sweet spot. So you see right here, this 0.75, that's really where the start of my sweet spot is. This 0.786 is really the hot spot, where I like to catch a lot of my entries. But if we fib the structure, right, we can see that that gets to our premium discounted price level, right? But then the way that I like to play my candles, I like to fib my institutional areas to my candles. So it's like realistically, the way that I typically end up playing most of these candles is like this. I play the top of it. I don't really play the open of it. So that's why even yesterday for like Ethereum, it's like a lot of you might have like maybe re-entered off like the open, but it's like I waited till it pushed above, right? So it's like if you were to really look at taking a position from this sweet spot that I really just marked up, right? The stop loss there to above the high would have been about a 10 pip stop loss, right? And just to the same target would be about a 1 to 11, right? But what I would anticipate is in like the next 2 minutes, I would anticipate something like this, right? So we push back up into this area, and then we start to break back down and fall towards the downside. So that's really what I'm looking for. So realistically, if we just really punch up if we get back to like 1800 basically, so like another like 2-3 pips above, like you could take a position with a stop loss at 1802. But like I said, if you're somebody who's patient, you're not just gonna get in, like you're gonna wait, like because we could realistically come and push all the way back up to the top of the structure, right? And then you could kind of scale into a position like that as well. We look at the 3 minute. Yeah, this is really what I would be looking at. Something like this. Like we could either hit this candle and melt, or we could come slightly higher. Like I said, into this area. But I kind of like this right now. Like I said, the R&R seems solid. Um, in my eyes, like I said, it seems like we have room to obviously fall. But truthfully, like I said, we will see, right? We will see what ends up taking place because anything could happen. I'm personally going to be setting limits right now. So um, if you guys were entering, like I said, I would wait at least till 1800 on the dot, right? We're close. If you think a pip or two, if you think that doesn't matter. It really does. But ideally, and like I said, this would be a position that at the very least, like a 1 to 4, like first TP would be like 1795. But I personally think we're gonna, like I said, fill this imbalance. This imbalance right here at 1788 looks pretty nice, if I do say so myself. So it's 7:30 now. So like I said, any drive up, like I would expect a drive up to start the top of this um, first what you call it 30 minutes, right? The beginning of this 30-minute candle. Um, any touch up, like I said, any quick little impulse up, then I would look for positions within this area for shorts. Right. So we'll move after just like how we're starting to do right now. That's kind of how I would go about obviously playing positions. So we came into this 3 minute area that we had marked up. So like I said, you guys could take positions starting from here. To be safe, stop loss above the high. Like if you don't want to watch it, stop loss above the high. So 1803 would probably be safe. That'd be about like a 30 pip stop loss. But realistically, like I said, I'm gonna personally be kind of like waiting to scale in. If it plays off this area, like I'm really just playing with my stop above this high, so like 7-8 pips. We'll say 10 with spread, right? So I'm really just playing this area to above this 3 minute area. So stop loss would essentially be 1801.13. And if it pushed above there, then I would look for entries within this area. So that's like kind of like two ways that I would kind of go about playing it, just so that you, like I said, there's still 2 points of interest. One is just like the very earliest point. I don't typically like to play those, just because more times than not on gold, especially, like we're just not gonna like react. We're not gonna do anything. So in terms of that, like I said, the beginning of this 30-minute candle is nice so far. I like how we're punching up. Right, we can basically, like I said, come tap 1801.29. Looks like that candle, but I personally like it right now. Like I said, I'm gonna be personally getting in there with the stop above the high, just so that I don't personally have to monitor it. But this is even an example of how kind of gold is a little cheeky to start the week on Sundays. So it's like we captured this little bit of liquidity here, so I could see this really from the perspective of we take that high, so hit out anybody that got in on Friday night for sells, right? Friday, and then ideally beginning of the week we just break down, and then we just melt to obviously get that that little bit of retracement to start the week, and then from there I would expect this continuation higher after we fill some more imbalance or we fill some more gaps towards the downside. So that's just something that ideally would make sense to me, in my opinion. But we're really just gonna take what the market is gonna give us. I really just think that we're gonna short off the rip because of how Ethereum and BTC are. Ethereum and BTC, gold, typically like they just be doing like the same thing, right? They're both attached to USD, so these are both kind of like safe havens in my eyes. But for the most part, right? If crypto's going down, right? Metals going down, vice versa. So, right, as of right now, like I said, if you guys entered, you guys could have entered either with like a 7 pip stop loss, or you guys could have entered with like a 20 pip stop loss. But I personally entered, like I said, stop just above the high, about 15, 16 pips, right? First TP in my eyes would be 1793. Like I said, you guys should be in there now. That's a very small stop loss. But ideally, this could be something where we really just run, right? Like I said, that first 1788 area is where I want to see lows get taken and that imbalance get filled. But we see here at 1782, we have equal lows. So I really wouldn't be surprised if we broke down to start the week and really just erase everything. Because if we really look at this, like there's just a lot of equal lows. And if we were to continue going higher, right, I would want to see this at least get filled. But like I said, realistically, off the 4 hour perspective, I could really see price breaking down and continuing down. So it's really going to be interesting to see. But this is gold, right? This is what we're looking at for gold. We can kind of recap Ethereum, right? So Ethereum initially initially we had called out an area off here. So this is kind of why I wanted to go over this. Cause I want to teach you guys how to manage positions because it's like there's certain things, for example, where it's like here. This is where the entry area was, right? 95 essentially, right? And when we take a look at it, right? We had initially come in here, right? Tap our point of interest and fell. So realistically, off that first initial entry, right? The stop loss I believe was at 05, right? So it's about a 10 pip stop loss. We can see price went up about a 1 to 2. So it's like it's certain times like this where it's like if you initially get a 1 to 2 reaction, a 1 to 3 bounce off the in like the first 15 minutes in the first 30 minutes, I would secure partials. Why? Because one, the same fundamental that I'm teaching you guys, playing off the open of the body. Because you can see we hit the open of the body, fell over, but what we ended up doing was we came slightly higher right after, right? And then from here, right, once we stuck down and closed, we got this engulfing close to the upside. And then we start to consolidate. Because I'm not necessarily looking at the charts all the time. Like I was looking at the charts like literally when I called out the trade, boom, I take it. And then I was watching Prismic. Right? Because you don't want to be glued to the charts, especially on re-entries, right? Because to me, I was like, okay, it's either gonna hit my stop loss, right, which is 10 points, or it's gonna be in profit, right? There's really one or two outcomes, right? So you have to accept the outcome of the trade before you take it. But when you see something like this, I want you guys to write this down. When price just hovers over your entry or consolidates, consolidation basically just means sideways movement. It's not really going up or down. I would really just look to close the position or reduce risk. So what I mean by reduce risk, let's say if you have a 0.1, so a mini lot, I would close 0.07. So I would close most of it, right? So immediately after that, what I was saying was, okay, right? I saw that we broke above that previous area. So I was like, okay, cool. Yeah, I think it was a 30 minute. So the 30-minute, I was like, okay, cool. Let's look for a reaction out of this area, which we immediately broke into that, took the high, and once we took the high, for me, right, what I was kind of paying attention to was a little, just any little break of structure. So for me, I went to the 3-minute, saw this, right, 3-minute break of structure, and then immediately, what did I see us do? We filled an imbalance, right? This is our 3-minute institutional area, right? Our institutional quote unquote candle. It's not really just one candle, it'll be a series of candles. But this was the one candle that we were obviously targeting. So realistically, we just missed that candle, right? And I can't recall if I took the first, if I entered off there, if I entered off this candle. But basically, if we see how it plays out, right? I'm pretty sure it was in here. Oh yeah, it was. My entry was at like 11. So realistically, when we look at this, right? So I waited for a 3-minute break of structure here, and then we actually fell even more, right? But right here, we actually had a little bit of an imbalance. So what an imbalance essentially is going to be, right? An imbalance will typically consist of 3 candles, right? So we can see here, there's wicks, right? There's a wick on the top, there's a wick on the bottom, right? On this candle, there's no wick on the top, and there's a ever so slightly small wick on the bottom. Okay, so when we have big bodies of candle like this, what that typically means was the order books were filled in whatever direction. So if we were selling, that means that there were so many sells going on in here that on the 3-minute time frame, there was literally no buys offered, right? So within this box right here, right, in between this wick and this wick, this highlighted area is an area in which there was no buys offered. So the reason why we came back into here is because in order to correct the algorithm, we need to come back and we need to offer buys in that area. Because for those of you that don't know, right, every time you buy or sell into the market, you're trading positions with someone. So if you sell, for those of you that just sold with me, right, if you just sold, you literally were just trading positions with someone who was buying, right? So an individual who was buying, you just traded positions with them. Okay, need to know if I need to change my account. Yeah, Daniel. So if you're free afterwards, I'm gonna give you a call because that's why I wanted to get on the phone with you to help you walk through. Because on the one that I was showing you, you can trade on the weekend. So I'm definitely gonna help you with that, so you can take advantage of these signals. But realistically, the stop loss that I had was above this high, so about 5 points, right? And I was still targeting the same lows, right? Because we'd failed to take that first target. The first target that we had was these equal lows right here, right? So the first TP that I had was 65. So we can see from just waiting, right? So initially right here, right, risked about 10 points and had a stop loss hit, right? So lost 10 points. Then now from just being able to be a little bit patient, more patient, wait for something more clear, because to me this was clean, but we just failed to really break down below again after. But here was one of those ones where it literally never came back, right? So if we get out of this replay mode, right, we see how prices continue to break down. This ideally, if you held it, would have been about a 1 to 20, right? Risking 5 pips for about 100. So it's like just by risking 5 pips, the stop loss that you could get on there would be, or the position you'd be able to get on there would be significant. So now it's kind of go back and look at areas in which you hit your stop loss, in which you lost the trade, and identify why you lost the trade. Because I never lose a trade and don't understand why I lost the trade. Right? So with the videos that I'm gonna be making, right, it's gonna make it a lot more simplistic for what it is that we should be doing when it comes down to analyzing certain things. But realistically, for Ethereum at the moment, like I said, we called out kind of like I called out the direction really yesterday for Ethereum and BTC. Like I said, we were a little bit earlier with the sell areas on BTC as well, but it was the same type of thing for the re-entries. But as for right now, um, like I don't, there's nothing really that's set up for me. Like after a week like last week, like I'm kind of besides gold, this gold sell, I'm gonna be probably taking the first day or two, like today, like Monday, unless something crazy happens tomorrow, I'm gonna be just calm for the first day of the week because we got 1,300 pips last week just off signals, right? There's no need to sit here and just rush into positions, especially because we got hit out yesterday on BTC. So now it's really just looking at it from the perspective of okay, right? Gold, you should be up 5, 6, 7, 8 pips, whatever the case may be. Ideally, our first target is 88, which would be about 111 pips from where current price action is, right? It would be about a 1 to 5, I believe, if I'm not mistaken. About a 1 to 7, right? 1 to 7. So you guys, like I said, stop loss above the high. We could still come a little bit higher, but I like the current reaction that we have right now. Um, because like I said, we just broke 15-minute structure, so for us to keep continuing down lower would make sense. Um, like I said, it just really is going to depend on price action. But at the same time, family, I'm going to go ahead and wrap it up